Digital lenders provide millions of Kenyans with a financial bridge from month-end to month-end by offering quick, collateral-free credit. Data from the Digital Financial Services Association of Kenya reveals that digital lenders in Kenya serve around 8 million customers, disbursing short-term loans totaling between 10 to 15 billion Kenyan shillings monthly. With the cost of living at an all-time high, Kenyans are being forced to dig deeper into their pockets to afford basic needs. To survive, they are turning to digital loans to meet pressing needs.
During this time, that's been difficult economically, not just for Kenya but across. We have become a very dependable source of daily living for a lot of our customers. And what we have observed is customers would rather default on their credit cards, would rather default on their rent even, than default on their digital loan, because they need that to survive daily.
To enable their customers to meet their daily needs, banks have increased their borrowing capacity, providing higher loan limits.
We have continued to raise the limits for our customers so that those who were borrowing 5,000 shillings, now they're able to borrow 10,000 shillings. And you see a lot of changes we have made to the limits for our customers to help them go through this time period. The other thing that we have done, I talked about the fact that for our core customers, we have designed a digital product for them, which goes up to 1 million shillings in lending and can be repaid over a period of a year. Again, is to support those customers that I need to pay school fees, that I need today to send their kids for training, whatever they need, or they themselves need some training, and also to support household or for household support.
As digital lending platforms continue to saturate the market traditionally preserved for financial institutions, major banks in the country are also turning to innovative financial products to lend to their customers. KCB, Equity Bank, Standard Chartered, and NCBA are some of the banks that have developed smartphone loan applications that have made the loan application process faster, more efficient, and more accessible. With a commitment to innovation, inclusion, and empowering millions of Kenyans with credit, banks are embracing digital lending to their customers who want faster credit and, in turn, contributing to the bottom line.
I think the areas of growth that you'd have seen, one is lending to individuals that has continued to grow, both on our digital platforms where we are up 4%, lending 478 billion in disbursements. And then you look at what you call our core customer base. Again, through our digital channels, we have lent 4 billion shillings to those.
As banks continue to shift to digital channels, customers are also increasingly preferring to conduct their transactions online, propelled by the convenience and immediacy of digital loan products.
You look at digital channels, NCB and our channel, one of the highest rated digital channels of any bank across East Africa. We now have 87% of transactions coming through the digital channels. So again, real growth that we have seen in those channels across on that platform, across all the countries in which we operate. We are serving 65 million customers now on those channels.
Despite the surge in mobile digital lending in Kenya over the past 12 years, there are increasing concerns about predatory loans, privacy infringement, and the opaque nature of digital lending and interests accrued. To tackle this, the Central Bank of Kenya (CBK) Act was amended in December 2024 to bring the digital lenders under more direct control and scrutiny of the CBK. While digital borrowing can be a valuable tool for achieving individual financial goals, it is crucial to approach digital loans responsibly. Poor borrowing habits can lead to a cycle of debt and financial stress. These are tips that you can use as a checklist to ensure that you are staying financially above the water. Create a budget and stick to it. Borrow only what you need and can afford to repay. Understand the terms and conditions of your loan.